Good afternoon, everyone, or good morning. Can you hear me okay? Cool. Just to let you know, we've been warning about this, and I'm a little annoyed about being too right, but on expiration, those are the kind of weird things that happen. But the deal is that the bonds, you just can't break up in the NASDAQ if the bonds are still on their low because there's an alternative to your money. So, in there. Now, the problem is, like I said, is being too right because we came in short and made some money, but not what we should have made, being bearish, but it happened pretty fast. But this is the next thing. Before you say, oh, we should have been short, just keep in mind this that the ES, yeah, that looked like a ledge. You know, I like ledges, but that was 8 in the morning. By the time I got on, you were here. Yeah, that's why it would have been great to be able to trade the SPX pre market. So a little rough in there. So that's one thing. But I wanted to show you because one of our loyal subscribers showed me how he did a triple on puts. And I thought I'd show you about that before I show you market outlook. So the first thing is the bigger the open interest, the more that spread traders usually have to unwind their positions. So just keep that in mind. So where's the biggest open interest in Disney? Is at 85 right here. So that's one thing. So now you have one reason. The other reason is the markets look like dirt. And what's the third reason? The third reason is that beautiful thing I try to show, and let me put it up here, about stocks that get overbought in a downtrend. So really in a downtrend, that 50 works the best. Works the best. So you had the open interest, you had the resistance, you had price resistance, 50 moving average resistance, and overbought, way overbought. So this is what my loyal subscriber did. I did not do it. I just want to bring that up, but it was a great idea. Is he bought these puts for 35 cents right here, betting on it going to 85. Well, it went to 85 for a second, as you see on the upper right. He sold them at 85 cents. Didn't sell them at the top, but he sold them at 85 cents. That was a good old trade. Just keep that in mind. So you're combining three reasons. Now, what do you do in some of the others? Well, I'm not real thrilled about Meta, and let me tell you why. We were just talking yesterday on the video and also when I was on Trader TV Live about where the resistance is and to look for reversal patterns. So the resistance, the big resistance with 310, but a lot of times it overshoots. Well, today it opened at 312, and that was a little fast. Literally, that was 3 minutes. 3 minutes. That's almost impossible. Plus, it closed on the high. So that was a little rough. So I'm just telling you, if you ever beat yourself up on these, just emotionally, just keep in mind, we're going to miss a lot of things. So definitely we're going to miss some things. So, and that's the way it is. Now, I'm just telling you on what I see overall, unless you see that bond market rally, which you're not, then the ES could easily break that downtrend line. So now it's oversold. I mean, right now it's oversold. You're sort of in purgatory as the markets still look bad, but they're oversold at support. That doesn't mean you have to buy anything. Just means it's oversold at support. So don't have to buy anything at all. Like I said, sure, that looks like it's going down. And that was like right before the opening. So that was a little rough, but I'll show you what I think's going to happen longer term. That doesn't mean today. Number one, that. So I'm going to go put this on a 4-hour chart. There, that trend line. So if that trend line breaks, I think it goes down another 70 points. That's number one. Number two is all about that 50 moving average. So on the chart patterns mastery, we've obsessed about this. Obsessed about this. So I'm going to take off the ATR trailing stop and just show you this. So right here. So all I'm showing in here is the ES in relation to its 50 moving average. It was over it. And the transports, way under it. Look at that. NASDAQ, way over it. Not anymore. So that was the whole theory, that everything would revert to the 50. Either the transports had to go up and the Dow had to go up. Well, now it's above it. So yeah, I'm going to look to fade Dow stocks. But back here, it went up just to catch up. Now it's above it. But that was the whole theory in here about everything going to the 50, which then brings up the next thing. What stocks aren't at their 50? And that's where I think you pick on it. It's extremely difficult because there's that one side that you want to go in there. Wait, give me 1 second. There's one side of you that wants to go in and short the world, but the problem is you're shorting the strongest stocks on the planet. But this is how we do it. So we were taking stocks at least 2% over their moving average and then looking for a reversal pattern. So I'll just show you what we did. So we just took stocks 2% over their moving average. That's it. And no more, no less. And this is just a moving average scan. This is just readily available on Thinkorswim. So all we did was take this. Let me get it up here. There. Yeah, look what's happened to all these stocks that are too far from the moving average. So I'll show you. This is all we're doing. And this is what we're going to do next week. You just take all of these. You got into it. Yeah, yeah. You got Lilly. You got Team. These are all too far away from their 50 moving average. That doesn't mean to blindly short them, but it means then look for reversal patterns. So if I put this on 2 different time frames, there. Yeah, you said the only problem with some of these is they're relatively thin. Not Amazon. Yeah, everybody loves Amazon. That's one I'm going to pick on for next week. Going to the strike price. Going to the 50. Now, keep in mind, this has big open interest at 140, and it went to 140. I bet you didn't think it would be down 4. I didn't either. So, but obviously that was a good one. So there's a number of stocks like that I'm going to look for next week that are above the 50. One is Amazon, one is Google. So way over the 50. So we're going to look for reversal patterns in those stocks. That doesn't mean to do them right now, but it means to look for that meta that happened so fast you couldn't even blink. So this is the groups I'm looking at. So you got the meta, which, yeah, I want to mess with later. Google, the Tesla. How about Tesla? Well, Tesla's had really good news. And also you have the United Auto Workers strike, which is good for Tesla. But here we go again, over the 50. So you can't just blindly short it because you got to wait for some kind of topping pattern. That to me isn't there yet. Because the problem is you don't know if it's going up to here first. Then it comes down to anticipation. So, I'm not sure yet. I'll get a lot more sure if I see the ES bounce against support and Tesla refuses to go up. But it's sort of uncanny how fast these went down. Look at that. Even the mighty Caterpillar. Yeah, Caterpillar has been great. It's over the 50. Amazon, Zscalers, Arista Networks, Spotify, Tesla. And I'm telling you, that's what I'm watching for next week. So today, this is a lot of that expiration stuff. Also, historically, this is a bad time. And that's what I'm watching right now. So just to let you know, in our account, we're just long GNRC, hurricane stock, and at support and short Google. And we came in short QQQ, and we came in short on some things that were great, and then other things we were too right. And that's where we are at the moment. So for next week, I want to see what this rally is made out of. You know, ideally, it goes all the way back to there. I don't think you'll get that, but on expiration, you never know. So that's what I'm going to be watching, is that trend line next week. That right there. Yeah, it got to the top. In hindsight, you know, everybody thought that was breaking up. But let me just tell you, the way I look at it, and this is one of my rules, is the more times you could connect points of contact, the more important. So many were drawing that trend line, and that's pretty weak. That's not that good. On the other hand, look at this trend line down here. 1, 2, 3. I mean, you draw it from here, it's a lot of points of contact. And so that's what we're going to look at next week. And that's why, even though a number of stocks look great yesterday, on my video in the we do charts. I do charts 3 times a week. In good conscience, I couldn't buy anything. So if I missed it yesterday, I missed it. So just keep that in mind. I just couldn't do it. So I just couldn't buy anything if the bonds diverge and we're at resistance. Datadog, yeah, that's another one overbought, but it just seems in this market that they are going to take down the ones that are over the 50. This one would be more one you want to do, yes, neutral to down. No doubt about it. Neutral to down. I'm just worried on all of these because they're oversold at support. But yeah, neutral to down, that kind of idea. But like I said, you're oversold on everything. So how would you play a Datadog? Well, let's see. I mean, for next week, you know, I know it's down 3. That's the problem with Datadog. It's really hard to buy puts or buy a vertical put debit spread when the expected move is what it's done today. That's a little rough. I have a tough time with that, just to let you know. Tough time with that. So for me, I like that idea. I'm not going to short it. I mean, to answer your question, I'm not shorting it now. I want to see how it works off that oversold and how the whole market works off the oversold. It's pretty oversold, which brings me to the next thing. If you're a day trader, forget about the opening. That was almost impossible unless you're a futures trader. Now, you could short the SPY pre-opening. Keep in mind, we were coming in short. So that was rough. But this is if you're a futures trader and you're trading a 1-minute chart, darn right you could short up here. Like I said, it was, you know, we missed a lot. But if you're going to buy, you have to wait for some kind of stabilization. And then that was no bargain because it would have stopped you out. So a lot of times what we do in here is we look for what's overbought, and then we talk about how it works off the overbought. It should have stayed above here. It didn't, but yeah, now it's stabilizing. So keep that in mind. Apple, I haven't been playing things to the 200. I've been playing things to the 50. Now, that being said, I definitely think, think will get me in trouble. But I definitely think at the minimum, the ES goes to the 50. Now, that just is a new contract, so I got to put in SPX. SPX. There. I mean, almost every time on a weekly, it goes to the 50 at the minimum. So on a daily, yeah. I mean, let's put it up there. So it's the same thing, Mac. I think that if you get one index to go to the 50, so I'm going to take off that and put the 200, because it's a good question. So it's way down in the catacombs. Most sell-offs get to the 50, to the 200. So the way I'm looking at it is what indexes could go to the 200, and that's what I'm going to be watching. So you got we'll just go through a number of them. The transports, that's a nasty thing that could happen here. Now, I'm not talking about so much the Dow theory as I'm talking about just related indexes. So if this breaks here and gets that close, you got to think this is going to get under that trend line, which makes you think the ones you're talking about that already look like dirt are going to attempt to go to them. So the problem with Apple, do you do it now? So do you go and do something under the market now when you're oversold? Because I'm really into initiation too. But that kind of idea. Then you get into something in the stratosphere. Yeah, that's only 27 points over. It just seems to me the ones that we should be looking at are the ones that are too extended. But that's, you're taking like the strongest on the planet. But that's what I'm looking to do. So, in fact, in the essentials room, because I can't put this on the free, this is what we did. Now, I can only put on the bottom because I can't manage this for you. But, Mac, this is the kind of idea. That's what we did. Like I said, I won't be able to manage it, but that was the idea, betting that Google is going to, at the minimum, underperform next week, at the minimum. Now, if it explodes, I'll be, but that's the theory. The other thing is do you go for the data dogs? I just think the ones to go for, the problem is like the chip stocks are starting to get hit. The AI. On the other hand, Amazon and Google might be not influenced, but I'm just going on technicals. That's all I'm doing. So I like that idea about Google. I like theories that I'm not going to lose a lot if I'm wrong. So keep that in mind. The other thing in here. So let's just go through it. My whole main list that I can share everywhere. So I change this all the time. So I add in here sometimes biotechs, I'll add retail. Just keep that in mind. I'll add all sorts of things. But this is my main list. And the reason I show it is so it's easier to scan. I can go put that over here. Now, a number of you have Thinkorswim, and it's sort of morphing into Schwab, which is a pain in the rump. Don't get me wrong. It's a pain in the rump. So right now, I'm just showing you Thinkorswim. See the home screen? If it's green, it's Thinkorswim. TD Ameritrade. If it's blue, it's Schwab. So right now, I'm still doing Thinkorswim. So the way I'm looking at it is I can take my main list of every stock over the moving average, but it sure seems like it's easier to do that scan I showed you. You can even do a scan of 1% over or any of them over. So that's what I'm watching. Even the lows of the world and the hub spots, everything's going down as you see. The only one not going down is that. Yeah, hurricane stock. But that brings me to the next thing before we go over the Amazon to the world is stocks that react well to terrible news. That's a good thing. So always go on price action. What am I talking about? Yesterday, they were recalling 64,000 generators. So the stock was down here. We had just done a spread, and that happens. Now, I had no idea why it started rallying. I would have thought it was down 10, but would be down $10. Well, and now it's higher than when that happened. It's up here. How is that even possible? Well, the thing is that it's one is a hurricane stock. The other is I do this. This is real unscientific, but this is what I do. It sounds odd. You go into GNRC because this was in Consumer Reports. These are kind of weird things I do. See that right here, Generac portable generators recalled, and they said it was in Consumer Reports. Look at that one. Recalls more than 321,000. That's even worse. That's July 30th, 2021. Now go look what the stock did in 2021 in July. Hard to believe. It went up. Yeah, believe it or not, it went up. It went from that panic from 396 to 440. And then it went even higher. But the point is, it shrugs off that kind of stuff. I don't know why, except like I said, it is hurricane season. In fact, the stock's almost up. So unbelievable in there. And that's the kind of thing that gets a lot of traders screwed is they see that news, they see it go down, they're like, it's going to 100, and they go and sell the 111 calls at like 110 calls at $1 that are now $2. You just can't do that. And it's all, like I said, how it reacts to news. And so far, it's reacting pretty well. And so, like I said, I'm not going near this at the moment. Longer term, I think we're going down. Let me give you some reasons. Number one, the bond market refuses to rally. Bad for stock markets. Number two, seasonally, we go down at this time. And number three, this volatility is really in the toilet. I mean, it was under 13 today. So that's a big deal. So we're definitely looking at calendars, like put calendars. So betting on direction and also the volatility, because eventually I think it's going there. Now, in what you mentioned with US Steel, there's another one going to, well, that's the 200. But I think you're right. If you start seeing a number of things going to the 200, you've got to bet on the other ones going at least to the 50. So, yeah, you're right. There you go. There's the Russell at the 200. You could have the YM at, well, so at least that's my theory. So that's the theory at least. So right now I'm watching the bonds sell off. That doesn't give me warm fuzzies about the broad market. So, and another thing, I got another tell for you, and this is new. I'm sort of a beta tester for them, and I'll show you what we're talking about. So, if you were with me when I used to be with Simpler or with Brecher Trading, I do this thing called the Stock Twitch Sentiment Table. So, and like I said, I am not shorting the uptrend yet on the 1 minute, because we're too oversold, even though I see exactly what you're talking about. It's just I have to go to different time frames. And when it looks like that, and it looks like that, where it's at support, the odds are it's going down if the bonds are on their low. The problem is, what am I going to make? And not much. That's the big old problem. So if the bonds were up, I wouldn't touch it. I see your point and I see the probability. I'm just not sure I'm going to do it. Give me 1 second. I have to broadcast out something. Well, I will in a minute, but I definitely see what you're talking about. Right, definitely, especially with bonds on the low. Like I said, though, that bothers me. And also, but definitely, I see what you're talking about. Definitely. But getting back to it, this is the other thing I'm watching when I mentioned StockTwits. So StockTwits has a sentiment table. It used to be I'd publish it every week, and it worked. Even though people poo-pooed it, it's all about extremes. It's not about just in between. So I like to have 3 reasons, and when I use sentiment, it's got to be 3 reasons. I mean, you got to combine that. That's another tool in the arsenal. So if I'm bearish and sentiment is way too positive, that's another reason to be bearish. Well, let me show you today. So here's the sentiment today. Not there. They're not showing it back here, but the sentiment was up here. Not now. Now people are a little hurt. But earlier today, if it would go back, which, like I said, it's still a work in progress for them, prior to the open, it was like 70, which is a lot. So if you look at weekly, which looks like a mess, basically it was all the way, that's yesterday, it was all the way up here. And so usually I plot them, and I do it once a week. But sentiment definitely matters. Look when the bottom of sentiment was this week. Yeah, there. Top of the sentiment. Yeah, market went down. So I'm just telling you that it's there were a lot of people on StockTwits that poo-pooed the sentiment because they just released it. And I replied to them, it's an art, not a science, but look for extremes. So when you go into this, here's another one, and this is free. And StockTwits is free. I have like 48,000 followers there. 34 and 29. That's not extreme. So this is extreme. The bearish number of bears on AAII was September 21st, which coincided with the bottom of the SPX. The bullish high corresponded with the top of the SPX. It's all about extreme. So that's something that comes out every Thursday. You got this is real time, and then you have CNN Fear and Greed. And you'll see it's neutral. But I'm telling you right now, fear was last year. Extreme fear is what I look for. Extreme positive was what I look for. Greed or fear. So that was neutral. That was neutral. That was too bullish. And so when it's neutral, you got to look for other tells. This isn't extremes. What was the other tell? The bond's doing bad. So definitely I see what you're talking about in here. And the probability of this going up and not down and hooking you, when the probability of it breaking up went down dramatically when the bond sold off. So definitely see your point. But like I said, expiration, you got to be careful. Plus, what's your risk reward? Well, you got all that right here support. You got all this support. So that makes it a little rough because it's just like the objective isn't there. So that's why I backed away. And don't get me wrong, I still like the idea for Google for next week. Tesla, I'm not sure. I only trade Tesla on a daily on a 1 minute chart if it has a bull or a bear flag. Meta, that's not much of a rally, that's for sure. So Google is the one, and Amazon I'd like to pick on next week if I want anything. Like I said, Dr. Bob, I just can't do it when you're oversold at support. So I didn't. I mean, just keep that in mind. Do I think you're going lower later? Yeah. Do I think you're going lower now? Well, I'm telling you, if bonds were up 19, I think you'd be all the way up here. Now, I'm not sure. But I will give you an idea of the kind of thing I'm looking at. These are risky. Usually, if I don't have 3 reasons, I won't go and do a $20 calendar. But definitely with volatility this low and the markets look like a lot of warning signs, not now, but definitely looking at some SPX calendars under the market. Let's say October, November, something like that. They exploded today. But I mean, yesterday you would have gotten nailed in them. But I think you're the writing on the wall now. You're dead right about that trend line, but then you got to worry about that one because it's triple witching. Right there. That's what I'm watching. So if it gets over that, even though it shouldn't, yeah, you're talking about up here. So it just didn't seem like the risk reward was there. No, you're trying to buy the November. You're trying to buy a calendar. So in there, you're definitely trying to buy a calendar. You're dead right also about the KRE, which, you shouldn't bring that up because it pisses me off. But because I got out of this too early, I totally agree. How on earth can the yields go up and the regionals not go down? Because they're sitting on so many of those bonds. So, I mean, I totally agree with you. So let me just show you an idea, and I'll put it on the bottom. I can't put it on the YouTube side, but how would you play something like this? I mean, you see what I see. On the other hand, it seems like every day the market goes down, it goes up. And every day the market goes up, it goes down. But how would you play something like this? Well, you don't want to play it for next week because it's funky on how it works, on how it just does what I'm talking about. But if you're right, you're definitely talking about down here. Definitely talking about down there. And Dr. Bob, definitely, I cannot chase strength. Don't get me wrong. Maybe I don't want to short weakness, but I'm not chasing strength when the bonds are on their low. But let's go back to WAL. Now, I would go into here as long as that doesn't include earnings. So let's go see when earnings are. All I do, and I know it sounds self-defeat, but this is the way I do it, is I want to lose as little as possible and make as much as possible if I'm right. We had a butterfly. We bought it at $1.40 and sold it $2.10. Actually, I rooted for it to go up. We're rooting for it to go up so it didn't go to like $5. But I'll give you a for instance. Definitely give you a for instance. Now, you see what I see. Sure, it could break up. That's why you don't want to go and pay like $5 for something. $3, even $3. So the first thing I do is go backwards and see when earnings are, or you don't even have to look and you can look at the volatility. So if it goes from 47 to 60, yeah, that probably includes earnings. So let's go look. So we'll go backwards. I bet you it's in there. So I just go backwards. So let's go backwards. Earnings October 20th. So you might say, well, if it's October 20th, why don't we do the 13th? Because you're not sure if it's going to be the 19th and include this, or maybe a little lower. So you just don't mess with it. So you probably go to October 6th. And if you go to October 6th, we want to do something under the market. No doubt about it. So what's your best case scenario? So your best case scenario is for it to go right there. I know that's what you're looking at, the path at that air hole. No doubt, looking at the air hole. So that's the first thing to watch. So let's say 45. So let's look. I'm just trying to structure something for you to give you an example. Now, it's stuck at 50 a lot. So just keep that in mind. The biggest deal, if you're going to do a put fly, figuring that it's not going to, crash too much, is you want to be sure that the middle strike covers the other side, so that the middle strike protects the other side you're doing. Yeah, it's hard to do just from experience a 6-point wide that expensive. It's just hard. But that's an idea of something I'm looking at. Just to let you know, something I'm looking at. Haven't done it yet. Give me 1 second. I have to post in the Chart Patterns Mastery an exit order. That was the beep you heard. There. I had to put that in there. So just to let you know, sorry about that, but I have a big responsibility. I try to be here all day to help. So now WAL is not about open interest. It's about the structure. So you might say, well, why don't we just play KRE instead? This is a good question. Because KRE to me is already down here, why WAL hasn't gone down. And WAL is one of the weakest banks. See the arrow? I put that in there a month ago. So this is near support. It's tough for me to play it. So that's where I am when it comes to that. That's not about open interest. Open interest is really only at the end of the day. Really, we found that out. So if you try to get an open interest prior to the open, let's say 2 days ago, you get your head handed to you. At least that's what I've seen. And Dr. Bob, this is what I was telling you. It's weird with expiration. About that. Yeah, it looked like it broke, but where was it going to go? Well, that's the whole thing. So I'm really into the chart patterns, the price support and resistance, and correlation. So if you see the bonds down this much, later, yeah, I think we're going down. This second, I don't know about that. So I mean, that's where I am. And just to let you know, I exited a losing trade. Barely, it was a loser. Now, I see what you're seeing, that if the bond market's on the low, then it's more likely that this is a big old bear flag and they're going to really nail it. There. And I see what you're talking about, but that's why I'd rather do Google or WAL as sort of secondary plays. So you saw what I did in Google. So the trend after lunch, I haven't seen that. I'm going more on just the pattern and the bonds. So, let's just say I go on probability, or I try to, but I get stubborn like everybody else. Let's say that usually it goes up around noon. They used to call it the noon balloon on the floor, but the bonds are on their low and it looks like a bear flag and all these stocks aren't going up. Yeah, then the odds are it's not going to be a noon balloon. And then in answer your question, does it resume later? Well, heck, when I see a bear flag, it's more likely to resume later. That's the tough part. Do you do it now? Do you mess around on triple witching now? And that's actually the dilemma I have for the last 3 hours for the Chart Patterns Mastery Room. I'm not sure. Now, do I think that this could be only down 28? Sure. Do I think that this is a huge accident to happen? And then it comes down to, do you be too cute? Not me. If I was wearing a mask, maybe I'd be too cute. Do you go and do something in Google, figuring that even if this rallies, you take the stocks that won't go up, that are extended, or do you just wait till later in the day? Because you see what's going on here. So, or do you go and just do something longer term? So, like I said, I did something in Google. So now, if this is only down 26 and goes to like here, yeah, I'd look to do a put calendar for next week. So, in fact, these are what I mean by put calendars, by the way. Yeah, I understand what you're saying. And you know what? That's what makes a market. I could say you're crazy, you're crazy. But on triple witching, you never know, number one. But I'll tell you, Doctor, like I said, probability. If these bonds were up 17 and this was down 38, I think of what you're saying is a lot more like possible, probable. Now I'm not sure. I do know this, that I'm looking at the 15-minute on the ES and I'm watching that MACD, and that isn't much of a rally. It just isn't much of a rally, oversold rally. I know it'll make your head explode about like hourly still oversold at support. But to me, what happens is you would love to see this go to here. So the opposite of what you're saying, to have the spike first, to get this to go to zero. So then it has enough ammunition to plow through that later. But like I said, with the bonds on the low, it's really tough for me to go and buy anything just on probability. And like I said, in the long, I'm just trying to be the house and go on probability. That's all. Now, I wish ARM had puts, but let me just tell you, this is another thing, another trader trick that we were going over yesterday. And I'm on every Wednesday after the close on Trader TV on YouTube, I think, unless they fired me. So I haven't said anything inappropriate. I know that, but maybe everybody fell asleep. But this is what I'm watching. And this is just for the future if you see another IPO. When you see initial public offering of a big old stock like ARM that's a chip related, usually if that rallies right on the opening, right here, people are buying that and they're selling the other chips to buy this. That's just a little trader trick I'll show you because I think it's valuable. But, I'm being partial because I say it's valuable. So you see that right there. I'll put a little arrow. Not right there, but way down here. Look what happened to NVIDIA at the same time. Look at that. It went straight down. So the second this opened at 12:15, this at 12:15 went straight down. So ARM's up today at $1.46, NVIDIA down 13. That's pretty wild. And that's when it comes down to, you're right. Do we go for the SPX, which will make a lot more, or do we go something like WAL for next week? For October. And like I said, the reason this has more implied volatility is you're not sure yet whether it includes the earnings or not. So I'm real interested in doing something like that, like this. And I haven't done it, like I said. Number one, going out 21 days. I really dislike doing a 5-point wide. I'd rather do a 6-point wide. Just from experience. We did this. We had this exact spread for today at $1.40. The only difference, the stock was 50. So you'll see for today, it's at 245. We got out at 210. That's what I'm looking at. So if it goes back to 50 by expiration, you lose 45 cents. Not bad. No, pairs, that's a great question about ARBs. Great, great, great question. Because when I was on the floor, so if you could trade the European markets versus the US markets. So if you could convert currency real quick, maybe you short Apple at, let's say, 176 in US, well, in Europe, and pre-market be able to buy it at 175 in the US. All things considered with the currency. That's a real ARB. Then you got these kind of things where they short NVIDIA against ARM. That's called a risk ARB, which means it's not really an arbitrage. An arbitrage is just taking advantage of disparity. And I'll show you a cool one, because I did this all the time. It's not there now. This was the first stock I was ever in, Magellan Petroleum. How was I in it? Well, I started with Merrill Lynch for all of 3 months in 1980. And Magellan traded on the Pacific and the US and like the Boston. So I was telling my parents, I'm like, it's trading at 13 and on the Pacific and 12 on the US. We got to buy it on the US. So they took and bought 100 shares, $1,200 worth, and immediately went to $2. We, believe it or not, my parents are passed away, estate stuff. We still have the 100 shares. The company isn't around anymore. But the reason I'm mentioning is I did this all the time. After that, I had it, a bug up my shoulder to do this. So if it was trading at, let's say, 3.5 on the Pacific, and it was trading at 3 on the New York, I'd go and short 1,000 shares at 350 and buy 1,000 shares here. Wasn't currency. It was just out of whack. I did that for a year. So that's a real ARB. That's a real ARB. This stupid risk ARB is not an ARB. I'm not saying stupid because you saw it worked in NVIDIA. But I've seen this. They call this a risk ARB, where you buy Home Depot and you short Lowe's or something like that. I've watched more people bust out doing that trade. That's risk. That's not risk ARB. That's pairs trade, like you were asking. So, or a risk ARB, same thing. But real ARB is disparity in prices that's hardly possible anymore because of computers and decimals. It's a pain in the rump. So that's where we are. But it's a great question. So ACI, I don't really know ACI, but well, I'll show you another one that was an R, but it could go for longer than you think. It's A's and B's stocks, SM77 and KS. So what do I mean by that? Well, I did this. All right. I was with a prop firm for 8 years, 9 years. I was they had 800 people. I was in the top 5 for all 9 years until it got just wound down. So yeah, one time I'll brag. I don't usually brag. The reason I'm bringing this up was a disaster trade. And the reason I bring up the prop trade is this. There's a IT/B. I don't even know if they even have it anymore. It was Gartner Group. So what happens is that one of them has voting stock and one doesn't. But for some odd reason, the one that has voting stock there was a B and an A. And the one that had voting stock was trading at a 7-point discount. 7-point discount. So I bought a lot of the one that was at a 7-point discount and shorted the other one. And it went to 7.5, and it went to 8, and it went to 8.5. So I build up and build up and build up until I had it on 500,000 shares. So my boss told me it's about time to get out. And I found out about a year later, that's because 8 other traders had on the same position. Yep. After we all got out, it went to zero. Yeah. Ugh. But the point is, that's an ARB, but it doesn't mean it's going to work immediately. So keep that in mind. Now going into I'll go into ACI. I wish I had more time. That's another kind of risk ARB. So there's a $24 deal on the table. Do you bet that there's another deal, something else coming out, like somebody with a higher price? There's another risk ARB. So, but that's another one I used to do. That if it was a stock for stock deal, let's say ACI was getting bought not for 26, but like for 0.6 shares. Yeah, if you short the one and buy the other, that's a real ARB. So that's, I could go into that for hours. I did risk ARB for like 4 years. So, but those are great questions. Great questions. I hope that's not too complicated or off the subject. So, but in there, and let me just tell you, yeah, we have all of 4 minutes. You got to have enough in your account, but let's say there's something like, uh, like mRNA is buying somebody and for like 0.6. So if you multiply it out with a calculator before the opening, they traded a discount because you never know what can happen. But let's say it trades at a $10 discount. Well, yeah, then you buy the one that's at a discount and short the other. So, but we used to trade big because we had a lot of leverage. So just, that's what we did. So I hope that's interesting for you. In fact, that was one I did a lot, was TWX, Time Warner buying AOL. What a stupid takeover. So what happened? Pre-opening, AOL was trading at a 20-point discount than where it should be trading. So darn right, you go into short Time Warner and you go in to buy AOL. And for 20-point discount, it immediately snapped to 10. So you made a quick $10. 1,000 shares is $10,000. So pretty wild stuff. Now, let me just tell you, it snapped $10. So I did it 50,000. Just to let you know, that's what they let you do. Did I have sweat thinking that something was wrong? Well, let me just put it this way. It's a lot easier to be aggressive when you don't have kids yet. Just keep that in mind. When you have a family to support, you don't go crazy like that. But that's what I did back then. So there was a lot of wild stuff that went on, just to let you know, in the 80s and 90s, and a lot of stuff. And someday I'll go over the boiler room. After Merrill Lynch, going to the boiler room. Yeah, that was, it's just like Wolf of Wall Street. It's really it was that bad. Anybody that says that's exaggerated, I was in the boiler room. It's all true. So it was awful. So just let you know that if I ever have time after the close, I'll be more specific. Now that makes you tune into the Chart Patterns Mastery. But like you see in here, you couldn't buy it. Do you want a short? Well, Dr. Bob, this is where I don't trade the indexes. I look to trade stocks that refuse to go higher. Should I have done Meta like right here against and buy some cheap 305 puts? Yeah, but it didn't really show me the relative weakness yet. All I'm talking about is when it went up here, the NASDAQ, this followed. What didn't follow? What was stuck in the mud? Well, ARM, Apple, Amazon. So you see that at this time of day, I usually do relative strength trades because I get real nervous about messing with the indexes after I've made money earlier. So that's where I am. And so I hope that helps. So thanks for being with me. By the way, abs, that's a proprietary thing that that was built for me with Simpler. So that's not something I can share. So I'm sorry. So take care, everyone.